Hello. Good morning, guys. Here we go. Good morning. Hi, this is Raj here. Welcome to ShareTreck, and it's a very interesting day today. I'm just going to wait for a second to see who is online today. We have a couple of people joining us. So it's about time to get started. Very confusing day, I must confess. I think we are in for a dead cat bounce which started yesterday, and we might probably go to the nearest resistance before turning around. Right now, all the futures are looking very healthy green. So I have to quickly sell off my TSLS and also take profits on both TSLS, which is the Tesla short, as well as FNGD, and sit on the sidelines, because I think today we may try to go back and test the resistance, which was earlier a support, and we broke down below. So that's the big story. However, what is confusing is a huge, a certain number of factors, and I'm going to talk about them briefly before we get into the actual technical analysis. Good morning, hot dog. And the first point I would like to start off is that there are some positive catalysts out here. Ukraine agreeing for the ceasefire. So that's a very big positive. Trump will not impose 50% steel aluminum tariffs. That's a good positive. And if you go and have a look at CNN, we see Trump imposes sweeping steel and aluminum tariffs. Europe swiftly retaliates. So European Union has announced it will impose duties on 28 billion worth of American goods. So this thing is still ongoing up and down, and it's not a very clear picture. I don't know, except for the technical reason that we touched this diagonal line of support. I don't know why we would be having a jump, and this looks like a trend reversal pattern to me. And logically, if I was to look ahead, I would say that we should bounce back somewhere from this level. Let me look at the scale. 19,755 on NASDAQ futures is where we should be bouncing back down. Now, coming back to the points that I was trying to make, I'm also thinking that the US Treasury is going to face a lot of refinancing challenge this year, because approximately $9.2 trillion of debt will be maturing, and this amount represents nearly 31% of the projected US GDP for 2025. And at the same time, we also know that Janet Yellen was using short-term instruments to finance the government instead of issuing 10-year bonds or 20-year bonds. And if you recollect, Scott Bessent was saying that when he takes over as Treasury Chief, he's going to stop this practice of loading up the short end and instead issue 10-year bonds. Now, since then, he has changed his opinion and he's only issuing short-term treasury bills. But the maturing debt of around 6.5 trillion is scheduled between January and June of 2025, creating a lot of pressure on the bond markets. Now, if this financing was to be done with a high interest rate, that would be a problem. So the best thing that could happen to the US right now is to get into a recession so that the interest rates will be low and the refinancing could probably take place out there. This is one thought I have in mind. And if this is going to be the way US goes, then probably you will see lower yields on the bonds. And if bond yields are lower, then I think money should come back into the stock market. So that should be an antidote for what's happening right now. So that's the way I'm thinking, and that's what is confusing me quite a bit. So what I'm going to do is, instead of thinking too much about it, I'm going to go and have a look at our technicals, and I'm going to try and see how best I can estimate what's going to happen going forward. So with that said, I would like to move into the TradingView platform. We are at NASDAQ futures, and this candle that you see here, this green candle, is today's candle. The futures have already jumped up, and my anticipation is that they are going to bounce back down from this level out here at 19,732.25, failing which they would bounce back down at 20,000, because the policy and other chaos, everything is still there. I don't expect them to go away in the very near term of 3 months. So we are likely to bounce back from there. And then the question will be, will this diagonal line of support hold? And that's why I think I'm going to unwind my shorts at this point of time. Let's look at
hands up WhatsApp video. Okay, Rajali. मैं अभी चेकआउट कर रही हूँ. Have a nice day.
I had a phone call. Sorry about that. Sorry about the disturbance. We have a huge area of support out here for S&P 500. We didn't even come close to that. And I have this reverse head and shoulders coming all the way down from here. And the target for the reverse head and shoulders is 5,516.50. I don't think we reached there. We came all the way up to 5,535, 15 points short. Maybe that's it. We have covered this gap down. And we are seeing a little bit of improvement out here on the momentum. But typically when I look at this kind of MACD and momentum, I'm not very sure that it's going to be an ongoing continuing trend. So again, I'm thinking that either we bounce back down from 5,639 or we bounce back down from 5,680. What is the reaction of the markets to this spat with Europe? I don't know. Europe is again a bigger entity. So there should be something happening out there. I'm not very sure. Let's look at this calendar out here. I'm just taking a segue back again out of TradingView, because this core inflation, if inflation comes low, that would encourage the Feds to have better odds of cutting interest rates. Right now, no interest rate cut is expected for at least 3 months. But if the rate cuts are going to be more imminent, I think that will be a boost to the market and that can push the market up. So I think 8:30 a.m. is very, very critical for us. I would like to see what happens at 8:30 a.m., whether inflation comes weak, and as a result of which we see the markets jump up, or the inflation comes strong and therefore the markets start dropping further. So 8:30 is going to be very pivotal. So I'm therefore very ambivalent at this point of time. I would rather wait and watch what happens, because I don't know what is going to happen. My thought is that we are in a dead cat bounce. If you look at dollar index, it's firmed up a little bit. It's above this huge area of support, which is bounded by 103.27 on the top and 103.051 at the bottom. So there is a lot of support out there. It's consolidating. So here also we are trying to figure out what's going to happen with the inflation report. And if you look at the 10-year yields, they are starting to go up, and US would not want the yields to go up when they are trying to issue new bonds this year. They want to see these yields coming down. The only way it will come down is probably with a recession. And all the things that we are seeing, the recklessness with the tariffs and everything, is pointing towards engineering a recession. But that could be conspiracy theory. So we should not go with the conspiracy theories. So I'm going to just wait and watch what's happening. I'm going to unwind my shorts, sit on the sidelines, and buy quality companies to dollar cost average, spacing them out. Now, having said that, let's look at the indicators, and let us look at where we ended S&P. So if you look at the S&P 500, it has ended below this diagonal line of resistance, and the diagonal line of resistance today should be at 5604. And if you go to the futures and see where we are in the futures, we are at 5625, which means we have already broken this diagonal line of resistance for S&P 500. And therefore, this line should act as a support if the trend continues. And if the pre-market action continues, we will be seeing a bounce back all the way up to 5,658 and then back down again, or all the way to the 200-day exponential moving average, which is sitting at 5,708. That's the extent to which I can talk of right now for S&P 500. Next, let us look at NASDAQ. NASDAQ had dropped below this diagonal line of support, and it fell below 19,594, which was the limit for it yesterday. It created a doji candle with a very small body, indecision out here. And if we look at the pre-market session, what's happening with NASDAQ in the futures, if you see, you can see that in the futures we are up 0.95%. We are at 19,582. So let us come back here and look at NASDAQ. And where is 19,582? 19,582 is about 19,565, which is our resistance for today. If we consider this diagonal line to be a resistance, we are gone above that. So that's now a support. So we are looking at 19,700 as the next resistance that we need to break. Either we bounce back down from there and retest this diagonal line of support, or we go further up and then test this diagonal line of resistance out here. And that is going to be at 20,097 today, which all means that when the market opens, we may bounce up and we have a potential of coming back down, assuming that the inflation reading that comes in is going to show that inflation is tapering off. And if inflation is tapering off, then the Fed is going to be more benign to cut rates. So that scenario will give us a bounce and sustain the bounce that we see in the pre-market. And if that happens, then these are the two levels from where we can bounce back down, because I think the bear channel is still intact. If you look at the VIX is down 3.38%. This supports the stock market going up. So this is another support for a bounce today. And I'm going to go to put call ratio, which is a very neutral reading out here. If I look at QQQ is up 0.99%, which shows definitely a bounce is in place. QQQ had cleared this gap. And if you look at the current price in the pre-market session, it has already recovered around, I would say, 40% of the loss of the day before. So the market is looking much stronger in the pre-market. But again, you can't depend totally on pre-market action, because pre-market participants are also retail investors out there who may make a wrong call. Now, that said, let's go on and have a look at AI. I'm going to keep the session short because I have to go and start unwinding my shorts in the pre-market trades itself and reduce my exposure to this bounce back. So let's look at select stocks. NVIDIA is up 2.42% in pre-morning sessions, and it's coming very close to 109.31, which is our resistance. And if we break through about that, and then I think our next resistance is going to be this diagonal line of support that we see out here. And for today, that's going to be 116.57. I don't think NVIDIA can go up that sharply, but that's what you have out there. And if you look at Meta is up 1.38% in pre-market trades. And our next resistance is going to be out here at 636.70. MACD momentum, everything is weak, everything is subject to inflation reports, so please keep that in mind. And we have Google up 1.13%. It has bounced off the support out here at 164.49, and it has got a resistance at 169.10. And as I said, we have a bounce in order, and it's a dead cat bounce, and it could come back down again, but the dead cat bounce can be terminated if the inflation reading comes high. Amazon, same story in Amazon also out here. Apple is going down further, and it has got a support with this diagonal line of support, and that's at 211.65. I don't think Apple will drop that severely today, but it's on the way down overall in pre-market as well as per the technicals. And if you look at Microsoft, it's up 0.67%, and it has got a resistance out here at 386.60, which is going to perform the role of a resistance. And if we break that, then this diagonal line of resistance kicks in, but we are going to come back down from there again because overall trend is bearish. Tesla is where I'm more worried, because that's where I got TSLS, and Tesla seems to be ready for a bounce back. It has bounced off the support of 217.81, and yesterday it managed to stay above. It opened above the previous day's closing, and it closed above previous day's closing. So there is a new higher low in my opinion, and if it continues to create higher lows, then it could create a bull channel. There is a much better strength out here in Tesla, which is scaring me because it's also filled up the gap that it had. So there is no reason for Tesla to go down further, and there is a reason for Tesla to go up because it has tested a huge support out here at 217. That's why I want to unwind TSLS and get out of the way. And Oracle is up 2.03%, and I think we have completed our gap fill that was out here. So there is no technical reason for Oracle to stay below. So I am thinking that Oracle will find the next resistance somewhere around the 200-day exponential moving average, which is at 158.13. AMD is a very overvalued stock in my opinion. It needs to go down further. If we compare AMD to Nvidia based on the PE, it's still very expensive. So fundamentally, it has to go down. It's up 1.46%. Maybe this is an opportunity to buy shorts. I would rather buy shorts when we are closer to the diagonal line of resistance. And for today, that diagonal line of resistance is 99.92. And then ride the way back down again. MACD momentum, everything is looking bearish. Now, Intel, there is some talks about a consortium taking over Intel fabrication facilities, and I've read it somewhere, but I'm not sure whether it is genuine news or whatever it is. There is a huge bounce of 7.84% for Intel out here. But overall, I think the stock is weak, and there'll be plenty of opportunities to buy the stock on its way up if the news is true. We have a lot of resistance. We are also way below the 200-day exponential. So I won't worry too much about it. Now, as I said, I want to expedite and close out. JD.com is one I want to see. It's down 0.86. My money is burning out here. Why did I do that? Okay, now let's go on to genomics, which is what most of our viewers are here for. So Verve Therapeutics flat in pre-market trades. Ginkgo Bioworks is up 0.36. But what I would say for the entire genomics sector is that if CPI comes in weak, then I think we'll get a boost for all genomic companies and a special boost for CRISPR Therapeutics. CRISPR is up 1.37% this morning after dropping around 2.24% yesterday. This line of support seems to be holding out very well, and there is this line of resistance at 42.84, which is going to function as a resistance today. And we also have the 100-day exponential, which is this orange line, if you can see it on your screen, and that is sitting at 44.12. So these are the twin resistance today for CRISPR Therapeutics. And then the next one I want to look at is Illumina. Illumina is up 0.57% in pre-market trades, and we have this huge band of resistance out here, which will continue to form resistance. The bottom of the band is at 89.52 and the top of the band is at 91.07. So those are going to be our resistances, and our support at this point of time is the all-time low of 80.60. And that's going to be our support. MACD has improved, but momentum, as you can see, is very low. RSI is absolutely oversold. So a little bit of dead cat bounce is definitely expected out here. And if the inflation report turns out to show that the inflation has gone down, Illumina and CRISPR are two stocks which are likely to bounce a lot. And let us look at Vertex, which is down 0.23%. I think Vertex could also be another beneficiary of CPI coming low. CPI report is coming at 8:30 a.m. So what I'm going to do is take some questions from you guys so that we can go all the way up to 8:30, and then I can log off and do my pre-market trades. While I wait for your questions, there is always a lag between when I speak and when you see it and when you write your questions. While I wait for the lag, I'm going to quickly look at all the genomic stocks to see if any earnings have come in and if there is any catalyst anywhere out there. Ginkgo, I see nothing. Caribou, I see nothing out here. And CRISPR Therapeutics, I don't see anything here. Grail, nothing. Prime, I don't see anything in Prime. Beam Therapeutics, I don't see anything out here. Alt Immune, I don't see anything new here. Bluebird Bio, nothing new here. Allogene, nothing new here. mRNA 0.44, nothing new here. ARC-G, I don't see anything new here. PSCB, nothing. Intelia, nothing. IMTX, nothing. Earnings is still out there. Editas, nothing. Iowa, I don't see any news here. Unicure, Vertex, okay, nothing is here. Hey, I've still got to think about breakfast. First, it'll be pre-market trades, getting rid of my Tesla shorts. That's my first priority, and then I'll go for that. Now, having done genomics, I want to go ahead and look at SMCI. SMCI, I don't see anything new to talk about. I would be happy if, say, SMCI goes up. I got some holdings out here which I would like to liquidate. Up to 0.96%. It has got a resistance at 42.80. It also has resistance at the 100-day exponential at 41.21. Sorry, 9-day exponential at 41.21. So that's what is holding it back. Next, let's look at Qualcomm. It's up 0.35%, but it has got resistance with this diagonal line of resistance. And for today, that's going to be 155.74. Broadcom is up 1.64%. Again, it has a resistance out here at 198.64. You prefer to trade the open, Raj? Yes, for today I'm panic stricken because I think Tesla is going to rip my face off. The White House event for Tesla is something that is worrying me because a lot of MAGA people will try to buy Tesla stock and buy Tesla because they want to support Elon. So I'm going to use the pre-market today to sell off my Tesla reverse. And I also have built up a sizable amount on FNGD, which is profitable right now. And I want to sell it because it can rip negative very quickly. And then I'm at the mercy of the resistances to push it back. So I'll have sleepless nights. So I want to do that hot dog. That's why I would do the pre-market. And pre-market is not much reliable, but at least I can reduce my anxiety levels. That's what I'm looking at out there. Broadcom. Raj, when is the last time you took public transit? I haven't taken public transit in decades. It's always been a car for me. I'm kind of the reverse. Yeah, that's what hot dog says. Do you prefer trading or investing? Which broker do you use? TD, Waterhouse, but I would have preferred to go for some trading platform which is much cheaper on the commission and which is much better, but I'm stuck with this because everything is linked there. I've been with TD for ages. Let's go ahead. Palantir 2.19 increase yesterday and 4.46. I don't know how Palantir manages to do this. Defense cuts are there, recession is looming, and 83.68 is the resistance out there. I would definitely expect it to bounce back down from there or from the 9-day exponential, which is sitting at 89.33. And what else do we have here? TSLS, it's down 0.48. I'm still profitable with TSLS. I want to sell this off, and and AAPB. Let us look at what else do we have here. FNGD. So FNGD is down 60 cents. I'm still profitable on FNGD. I need to sell it off. So real estate is in the dumps out here. So there is not much talking about the real estate business out here. So it's in the dumps. And yeah, that's all I have. Hot Dog, do you have anything that you want to talk about? If there is anybody else who wants to ask anything about the stocks, then we can take those, or else I'm in the mood to go away and try to get rid of my shorts for Tesla. So today is a bounce back day in my opinion. I'll just summarize my conclusions. I would say that we have a bounce back coming up, and that bounce back is going to be a dead cat bounce. I don't know how long the bounce will last. I have already identified some levels of resistance for you all, which I think personally is going to be the place where it will turn back and come back down again. I think we are going to be going beyond corrections, and we are going to head towards the 20% down overall. And the reason I'm thinking about that is because if the market goes better, and if inflation takes hold, and the interest rate starts going up, it will be very difficult for the US to refinance 9.2 trillion of debt that is maturing this year. So they definitely want to have the yields go down so that they would have a better deal selling their long-term bonds, or else they will resort to having to use Janet Yellen technique of just funding in the short term, and that will be a very wild ride. So things are looking very mixed for me out here. And inflation data release prediction. No, I'm talking about treasury debt. I'm talking about treasury debt. That's the number I have for the treasury debt, out of which I think 6.5 trillion will mature between January and June of 2025. So we have already that process happening, and that's what I have as the information that I'm looking at, and that's going to be the reason why I think we are going towards a recession, because if a recession happens, then you have easy money system, and I think it will be lesser debt burden for the US because I think their debt service cost is close to 1.2 trillion, and that's a lot of money. They would definitely need to cut it down, and I think that's why they're all running like headless chickens with this Doge and other things, trying to cut left, right, and center, and trying to engineer bringing back manufacturing into the US. The way I learned economics in college was that as the economy improves, it moves from being an agrarian economy to being a service sector economy. And in that service sector economy, it's all about value addition, creating patents, creating intellectual property, and managing brands, and managing product lines, and generating revenue. So that's where advanced economy should be. And underdeveloped economies are predominantly agrarian, and they have agricultural and mining kind of outputs, which are all exported. And the exports go into developing economies, which have the processing and manufacturing plants, and all of those things are owned and deployed by advanced economies, which own the patents, which own the brands, and which subcontract all those manufacturing and processing work to developing economies, because they have the skilled workforce, and they have a low cost of operation, and they have weaker regulations. And that's how China came to have corner so much of manufacturing market, and that's how India came to corner so much of back office and software offshoring. So this is the fundamental structure of the capitalistic economy, and what US is trying to do is trying to swim against all those tides and trying to make expensive manufacturing happen in the US. And that would mean that the US population will have to pay a higher price. So layoffs around the place, and the gap between the rich and the poor will get widened, and probably billionaires will start relocating to other places and deploy their capital into US. So that's how I'm thinking. Hot Dog is saying the market is in the economy. You're right, market is in the economy, but it's a reflection of the economy, because the people who can have influence on the economy are the ones who invest in the stock market. I don't think your average bartender or others have the kind of money to invest in the stock market, but a lot of salaried people have their 401k which has got investments in the stock market. And people like us in Canada, we have money in the stock market that sits in the RRSP. So it's all ultimately intertwined. So I hear what you're saying, Hot Dog, and probably I'm a bit panicked today because I'm worried about my Tesla shorts and the FNGD because of this bounce back that I'm seeing in the pre-market. But I hear you. But right now I'm feeling that probably what US is trying to do is not logical. If US wants to do that kind of a thing and become isolated from the world, because if US is going to produce something so expensive, the high level of salaries that you have to pay in the United States, the high level of costs that you have for energy and everything, then US won't be able to export anything to any country because other countries can produce them much cheaper. What that would mean is that the US will have to scale down its production to just cater to the US markets and put heavy tariffs to make cheap imports as expensive as what they have in the US. And I have seen this story play out in India. Indian government had a lot of heavy tariffs to make domestic production stronger, but it was counterproductive. The domestic manufacturers took advantage of that and did not improve. The biggest example I'll give you is in the automobile industry in India. We had two brands, one was Fiat and one was Ambassador. These two brands never came up with a refresh. It was always the same old car that they just changed the shape here and there. Engine was never improved, mileage was never improved, safety features were never improved, there was no airbag. Okay, so it went on for 4 decades until the government decided to bring down all those tariff barriers and open up the market. Now we have really good cars in India, and the Indian manufacturers have also improved, and those two dinosaurs, they are dead, and it's all new automobile companies. So I'm thinking India has already learned the lesson, and now US will have to probably start learning the lessons because they are at the cutting edge right now, and they have done everything that economics dictates for an advanced economy to do. And even they had gone to an extent where NASA was going to look at really high-tech stuff, and it was going to do the conceptualization and planning, and it has started subcontracting and creating a burgeoning private space industry. And with all these kind of situations, the government will not have the strength to have these government agencies which are supposed to do the moonshot kind of visualizing, and then breaking it down and handing it over to private sector and paying them to get it done in an inexpensive manner. That is the way government should have cut costs. But the way they are going cutting costs, I think is counterproductive. And that's why I think we're going to be in a bearish channel. I think the midterms will be the turning point where the bearishness would probably be reversed and we'll start moving up again, assuming we have some kind of a balance coming in the Congress to put a bit of control on the movement that we are seeing right now from the White House. So it's almost CPI time. It's another 15 minutes to go. So guys, I think I would like to wind up today's session right now because I want to go and grab a quick breakfast and be back before CPI so that I can pull the trigger on selling my TSLS. And Hot Dog, I hear you about the pre-market. And I will also keep in mind what you have said, the market is in the economy. Yes, I'll keep that in mind. And we'll meet again tomorrow. Take care, guys. Have a nice day. Bye for now.